Another Saturday, another episode of Zero to Funded. This is the course on YouTube where I basically guide you with all the tools needed to get you funded. So today we're going to be looking at liquidity concepts. And it's a funny story. When I used to start trading back in the day, like a year ago, I used to have no idea about liquidity. And more times than not, I used to get used as liquidity. And you'll understand what that means by the end of this video. But many times you'll be taken out and you'll hit your stop loss and then it goes in your desired direction. Now, I'm sure you've suffered this, and today all of that will be, cleared, and you'll understand why the market likes to do this and how you can actually use this as an advantage to, add to your trading. So let's get right into this liquidity concept, and yeah, let's begin. So first, I just want to recap because this is very, very crucial. Swing highs and swing lows. So I've got this example right here of swing highs and swing lows. So as you know, swing high needs a lower high to the left and a lower high to the right, as you can see there. Okay, we need this for a swing high. Similarly, with a swing low, we need this sort of thing, a higher low to the left and a higher low to the right. Every time I say these things, higher low, higher right, like I get muddled up. But essentially, this is what you're looking for. Now, in terms of liquidity, what are we using? Why are these concepts so powerful and why do you hear about them so often? It's basically because these concepts are patterns in price. And at these specific levels of price, we see a lot of reversals, a lot of manipulation, and a lot of large moves begin. So, liquidity, we have two names for it. We have buy side and we have sell side. I'm going to explain why they are called buy side and sell side. So, and just to note, buy side and sell side liquidity will always be, at swing highs and swing lows. That's why I'm marking it out here. So, buy side and sell side. So, buy side is called buy side. Why? Because if someone is shorting the market, their stop loss, the most, common sense, if you will, place to put your stop loss would be above a swing high. It's protected. Swing highs are usually known to be very strong areas of price. So if I was shorting the market, I would have, let's say, my entries there. My stop loss would be resting above there, and whatever take profit, that doesn't matter. Similarly, if I'm buying market or if I'm long on, let's say, EU, my stop loss will be underneath a swing low just to keep it protected and take profit somewhere there. So underneath my swing low is my stop loss, right? If I get stopped out, I get liquidated. So all it is buy side and sell side are places where a lot of people's stop loss orders are placed. Now, these are very obvious places in the market when looking at technical analysis. Swing highs and swing lows are prime targets of people's stop losses, hence why we usually mark them out as buy side and sell side. But essentially, when we come into these areas, so let's say buy side liquidity, if we're coming into buy side liquidity, there's a lot of the time what will happen is we'll take out all of these traders and then we'll have that main move down. So people here who were shorting, yes, they had the right market direction, but they were early in their trade. Hence why the market came up, took their stop loss out, and then plummeted. And this is why you must have faced, the trade going in your favorite direction after you get taken out or stopped out. Okay. And the same thing applies to longs. Okay. People who are early buyers usually end up getting stopped out right there. And then we get that main energetic move to the upside. So these liquidity concepts are very, very important because in the further parts of this course, when I'm talking about ICT Power of 3, and just in general, when you're looking at my YouTube channel and we're talking about liquidity and I've marked out, buy side, sell side, you'll understand exactly what I'm talking about and why these areas are so reactionary and why I actually use them as an area of interest and why you should too. This is a trade I took today, but that doesn't really matter. All I want to show you is how important liquidity is and how, powerful it is really. So as you can see right here, we have a swing low right there. And you know what? I'll go on a higher time frame so it's easier to see. We have a swing low right there. Remember what swing low was? High low to the left, high low to the right. So swing low right there. I can mark it out there. And then what do we have underneath the swing low? Sell side liquidity. So let's mark that out. And what do we see? We come into it, take out all of those people who are early buyers. And then what did we do? Go right up in the desired direction. So we stopped out all of these guys who were early buyers. So theoretically, obviously you don't know, but let's say people had their orders like this during Asia and below the swing low, they had their stop loss. What did price like to do? Take it out and then go in the desired direction. Now, not only does this, if I go back to that example, not only does this take out early buyers, it also takes out breakout traders who are looking to sell the market. So breakout traders will be looking to sell the market the moment we go past this sell side liquidity. So the moment we came underneath here, people are selling, okay? People have put their sell stops essentially right there. So people are selling and the stop loss may be above this swing high. So what this move does, and there's so much manipulation in this market, it takes out sell side liquidity. So it takes out these early buyers, number one. It also triggers these breakout traders into a trade and then goes and takes them out too. So as you can see, it's just taking out all sorts of traders. And this is why it's, a lot of manipulation. And this is actually what bases the power of 3, which we'll get into on the later part of this course. But as you can see, it happens everywhere. So if you zoom in on price, you can see this. We have a swing low right there. What do? We liquidate it, come down, take it out, sweep liquidity. That's what it's called. It's called a liquidity sweep. Once you see these areas, it goes down and goes up. It's called a liquidity sweep. So we sweep that and then it goes up. Now, usually after a sweep, you tend to see an energetic move. So as you can see, sweep, energetic move. Sweep there, energetic move. It's everywhere in price, okay? Like, let me try finding some more examples. But you should actually go, this is your homework for today, actually. Go onto the charts and just mark out liquidity sweeps. Take screenshots, okay? On a Mac, it's Shift, Command, or something. Just take a screenshot and add it to your Notion template, which is down in the description below. It's completely free. So just open that up and paste your screenshots in there. And over time, you'll have a large, sum of data to, back up and, just increase your market knowledge in a way. So here's another example. Liquidity there, right there. Boom, sweep, energetic move up. Okay. And it happens on on a wider scale as well. It doesn't have to be very zoomed in. It could be liquidity, swing highs somewhere here as well. So look at this as an example. Equal highs, yeah, prime area of buy side liquidity. So we'll just draw it right there. Buy side liquidity. What do? Come into it, sweep, and then go down. Now, one way of identifying if a liquidity sweep is strong or weak is the wick, okay? Most of the times when you see a large wick coming off a liquidity area, a buy side, sell side liquidity area, an old swing high, an old swing low, then if it leaves a large wick, it's a good chance that it's a really strong liquidity sweep, and we are likely to go in the opposite direction. So as you can see there, large wicks. So that is a good, basis on seeing if it's a liquidity sweep or if it's really not, and it's actually going to go in that direction. Apart from that, pretty much just go on the charts, and I'm just going to look at my notes real quick to see if there's anything I missed. But I think that's enough for you to know about liquidity, and it's going to be really key. Just keep watching this video, and the later videos in this series will be easier to understand after you master liquidity. But that I think is it for today. Join the free Discord, link in the description below. Come say hi. I'd love to get to know about your trading. The mentorship is down in the description below. It's extremely valuable. Like, just check it out at least. Look at the kind of things I've added on it. I think it's very beneficial for you, and I've basically made it for my younger self. So it has everything that I really wanted, and it's packed with value. So 100% check that out, and hopefully I'll see you soon.